Hey, welcome to the Closing Beat, everybody. Happy Monday to you. How you doing out there? We are financial advisors here at Jazz Wealth. Actually, what do I got here? Get an advisor who puts you first. It all begins with a conversation. We'll learn about your achievements, concerns, and obligations, and what you want in retirement, and your appetite for risk. That sounds great. You had to call Vanguard for that one. Actually, they marketed to us here, so yeah, once you approve the strategy, we'll put the action together. If you want to speak to one of our many advisors, you'll call Vanguard. If you want to just work with me or work with Eric and get down to it, of course, check us out at jazzwealth.com. Everything you want to know right on the homepage there. While other advisors are playing checkers, we are playing chess. And unfortunately, sometimes, in chess, you have to play defense. It's not a good position to be in, but if you have to play defense, it's fine. One of our clients needs to play defense. They didn't tell me. I'm not going to tell the whole story because they didn't say I couldn't share it, but let's just say they went to go buy a new car. Somehow they ended up with two, and it wasn't at the interest rate that they thought, but they thought it was, so they signed it and they went home. And I had to help them through that chaos, which, yeah, it's what it is. But all of our clients, of course, you're welcome to ask any question that has to do with your finances before you make the decision. Makes it a little easier on us, so be sure to help us out with that. Anyways, do we have a Guess the Dow winner?
Yes, we do. No visual on that or anything like that. But yeah, we got a Jarek S. Jarek S. is our winner from last week.
Nice.
He is a client, so we are going to be crediting his account. But yeah, Jarek S. is your big winner from last week.
Jared took the credit there, and I'm going to boost your volume a little bit because old Cody's in the corner.
Yeah, sorry about that.
There you go. Jared S., congratulations there. If you want to play Guess the Dow, go to jazzwealth.com/Guess the Dow. If you're a client, you can have your account credited $100. Hint, Roth IRA, if you want to do that. Let's take a look at the stock market here today. After a 21% gain year to date, we have now fallen just about 5% in 1 month. Right, so 21% all year, we give back 5% in just 1 month. We got rising interest rates, now the Chinese economy, question more ways than one, not just the economy, but real estate as well, which is a part of it. Most analysts still have a target for the year that's around 4,700. I don't know if that changes, but for the most part, analysts are still right in this area. So they predict or are assuming that through some wild back and forth or whatever, we'll ultimately end up at 4,700. I suspect you're going to see some changes there. If you look at the S&P, I'll use the index here. We are still under the 50-day moving average. Right, so that's that blue line right there. In our notes from Jazz, we actually talked about the impact of that, the forward performance. So if you're one of our clients, a research member, check out the notes there. I went through a whole bunch of data to show you what happens when we break the 50-day. Is that a buying opportunity or is it a reason to run for the hills? So certainly something to check out there. You also have investor stock positioning. This is not mine. I did not come up with this, but this is a Goldman Sachs data point. It's one of their indices that they use. Basically, what they do is they take 9 metrics and combine it into one aggregate index. I don't know, just so it's real simple to see. I've shared that with you, some of the things that we do here for that. This is one that talks about investor positioning. And unfortunately, that's still on the decline there. The average about 1.5. We are sitting around 0.8 and declining. So investors like yourself, you're out there saying, I'm gonna put a little bit in cash, I'm just gonna kind of like work my way back a little bit. And that is obviously being spotted by the big guys out there. So something to take a look at. Actually, let's go a step further. So mutual funds are doing the same thing. They went from 2.5% net cash to 2% net cash in June. Hedge funds have done the same thing. More leverage means they're essentially being more in the market, right? So it's less cash. They're doing the opposite of you. Retail investors, you guys are doing the opposite here. It's getting better, but you're doing the opposite. This is a data you can come up with anywhere. Just look at fund flows of ETFs and mutual funds, and these are the aggregate dollars that are moving in or out. And so far this year, very skeptically moving money in. You can look at the average, of course, trending higher, but over the last month, we've seen money come out of it could be equity ETFs, blue chip mutual funds, things like that. People are deciding to move their money. Where do you think they're moving their money to? Bonds, right? We've talked about that. There's other alternatives now. Bonds. In fact, they hit new highs today. So if you're like, the interest rates are killing me, I don't want to buy something, but I want to have safe money and I want to put it to work without being in the stock market, well, that's what we see. You're taking money and moving it out of the equity ETFs and going over to bonds. If you're not doing that, then we can actually track how you're positioning your portfolio. So what we have here, I've shared this before. We track the performance of cyclical stocks versus the performance of defensive stocks. And then we just plot that on one line. So if the line's going up, then your aggressive cyclical stocks, those are doing well. If the line's going down, which unfortunately we've had through the summer and coming out of the summer, then defensive stocks are doing better, meaning you're taking that money and you're saying, I don't want the risk. I'll go over here and I'll play defense with stocks that tend to do well no matter what the economy does. Right? We'll go over a couple of those here in a little bit. Nonetheless, just wanted to point that out and share with you some of the updates of where things are at. The NASDAQ had a decent rally here today. Remember, we talked last week that everything is oversold and due for a short-term bounce. That is very common, actually, from here, and that is what we're seeing so far. One thing that didn't quite bounce yet, the Russell 2000. The Russell 2000, if you look further out, if I can't zoom this chart out, actually. Maybe I can. There you go. So if we zoom out and we look further back, look at this range that we're stuck in the Russell. Well, that last rally took us all the way to the top of that range, and unfortunately it failed, right? So that's this right here. Well, this pullback so far hasn't been bought. It is oversold in the short term, and you will likely see a bounce in the Russell, but today did not participate. Bitcoin didn't really participate either here. I want to talk about that. Last week started falling off of a cliff for no apparent reason, at least initially, and has yet to really bounce back. Bitcoin trading at 26,000, and all the other coins, there's a lot of the pricing on the stable coins, not so stable. Some of the altcoins that are out there, of course, seeing a little bit of pullback as well. What else do we want to cover? I got to do it, man. Look at your rates. I feel like a broken record. We keep talking about this. As prices of bonds go down, interest rates go up. Interest rates are going up. That's basically what you can see there. The 30-year mortgage rate goes back to, it hit a high that I have not seen since I was in high school and therefore did not know really much about it. But you got to go back that far to when this old dude was in high school. That's the last time we've seen mortgage rates this high. That will have an impact. By the way, that the price of bonds moving lower will have an impact on the stock market. It kind of already is, but it will be something that you have to focus on. For the moment, people are kind of shaking it off. Don't. That is not the way it's going to go. Notes from Jazz this weekend as well. I covered what happens when rates are getting so strong out there like that. How does that impact the stock market? How does it impact bonds? So we talked about that in our Notes from Jazz if you want to see a little bit more there. Elsewhere, not a whole lot. Got crude oil pulling back just a little bit and gold ever so slightly higher, breaking its streak of those lower lows and lower highs that we talked about last week. That is officially an all-time record. If you want to learn more about that, of course, take a look back at our classes last week. Okay. We're going to go there. Vaccine stocks. Pretty strong day for them. Novavax was at one point up 15%, up 13% on the day there. Supposedly, we're going to be wearing masks and stuff again. The vaccine stocks all higher thanks to the variant that's out there that the World Health Organization is more than likely going to start leaning towards saying, hey, this is a thing again. We have to pay attention to it. That's what's going on there, and that's why those stocks did well. Pfizer as well, which it could use a little bit of help, but Pfizer coming off the lows there. You might notice if you're looking at vaccine stocks, vaccine distribution stocks, anything really related in that category, most of them did well. Not all of them. There is, of course, that old J&J over there, right? They had a little tough time with the vaccine. But supposedly the vaccine makers that came out and were willing to comment on this said, yeah, don't worry, these vaccines are going to cover it. So stock investors wanted to participate in that for all the money that was made last time. I say that with a hint of, bad news. Bad news. We'll see what happens there. But as we get closer into the winter, it does appear that is going to be something. Of course, if you look up on social media, there are conspiracies everywhere. Some are fun. You know what I mean? If you know you're having a good time with it, it can be fun. I don't know. Can it? Anyways, moving on. Okay, American Airlines pilots come up with their deal. If you're a pilot for American Airlines, we actually have quite a few clients that are pilots. 95% of your fellow pilots turned out to vote on your new pay package there. You are getting a 21% immediate raise and 40-something percent over I think it's 3 or 4 or 5 years there, somewhere in there. So congratulations if that is the case for you. People have spoken. All right, moving on. Goldman Sachs a little bit lower here today. They have a large not private, but a large wealth management division that they bought. I feel like it was less than a year ago. They're talking about selling that and focusing more on their core business. And so stock was a little bit lower on that news. It's not going to be that big of a deal. I think someone will actually probably pay a premium for that. So I don't think that hurts them in the short term. Very likely a smart decision for them. Taiwan Semiconductors, you don't get this all the time. So what were we at, 1.6% today. They said, hey, I don't know who keeps saying we're going to lower our guidance when we report our earnings, but we will not lower our guidance when we report our earnings. If you follow the rest of what they said, you kind of just got an insight into their earnings there if you care. News comes from a follow-up from Investor Day. So it's been a month already. Yeah, like July 19th, 20th, something like that. They had their Investor Day. They were following up to comments and rumors that have been spread because of that. And that stock bounces right off the 200-day moving average. Good for them. What do we got here? Meta. Are you using Threads? Cody, are we using Threads still?
No, we used it for like a day.
He's like, I don't know if I should say yes. Actually, unfortunately, a lot of people did that. The Wall Street Journal says that Threads, the users for Threads, has slowed down to less than 10 million people per day. So there you go. You're not the only one.
I saw like half their user base left, so we left in solidarity with them.
Oh, okay. There you go. Well, I don't know. I still get alerts and stuff. I'm like, maybe No, I'm not going to do anything. Sorry. All right, so that didn't hurt Meta today, but likely the more they continue to invest into it, if they do, the worse it's going to get for them. Kraft Heinz, they could use a bounce here, and here is what might cause that. Kraft Heinz, they do a lot. It's a conglomerate. They've got a lot of different brands. Somebody, I forget his name. Let me get his name. Carlos Abrams says, I got an idea. Let's revamp Lunchables. They make Lunchables. You ever had a Lunchables? Cody?
I used to love Lunchables.
Lunchables, yeah. It's supposedly good for you, but, we all know. But anyways, this guy comes out and he's like, oh, so I'm going to be the next CEO. Here's what I'm going to do. We're going to make Lunchables, sort of revamp it a little bit, and then we're going to go and sell it to schools. A $25 billion market he's proposing there, even if they don't get all of it. Obviously, schools are a little bit skeptical thanks to the health and everything, but compared to what they're eating, I don't know. So look for Lunchables soon in the schools if Mr. Carlos has his way there. I didn't think of it, but I'm kind of surprised that they haven't thought of that before. You know what I mean? That makes perfect sense. What else do we have? You may have noticed Palo Alto Networks. They are officially the best performer in the S&P here today by about 5%. That move today is coming based on earnings, all better than expected. They really killed it. So if you happen to work for them, we do have some clients that work for them. Congratulations. Other than that, stocks in the news, that's it. We have stocks reporting earnings tomorrow. It's going to be all retail related. Lowe's is going to be the most obvious one that reports. You also have Macy's, Dick's Sporting Goods, BJ Wholesale, Lazy Boy, Urban Outfitters. You see how this is going? Retail season for that. Doesn't mean that's not important. It just means it usually doesn't get as much attention. Lowe's will, though. Of course, that's an interesting little sub-barometer of the stock market, of the economy, so likely to see that. Your best performer is Macy's, believe it or not. 87% of the time they beat on earnings, and they've only been down once in the last 8 quarters after reporting earnings. And that would have been 3 quarters ago. Yeah, there it is. So here it is right there. So other than that, it has been up 7 of the last 8 times. Interesting. Dick's Sporting Goods, I believe, comes in second place. It's up 80% of or it beats on earnings 80% of the time. However, it's only been up 6 of the last 8 earning reports there. And Urban Outfitters ranks towards the bottom, actually. Yeah, that's it. All right, what else? I think that's it. Remember, before we go, we are here. We're a week past that. This is the rolling volatility on a calendar day basis. And so as we get through August into the end of this year, we do see volatility creep up. It is okay. It is supposed to happen. It is seasonal in nature. Just a heads up. If you notice volatility going up, which it is, that's supposed to happen. All right, I'll wrap it up there and get on out of here. You guys enjoy the rest of your day. We'll see you tomorrow, of course. And hang on tight. Got a little bit of a rodeo coming.